Good morning, everyone. I'm extraordinarily proud to be here on this stage and to be in Amsterdam. When you always hear about fintech and online lending, it's always about San Francisco, London, but this time it's Amsterdam. I'm very proud. I'm running the Dutch business. As said, my name is Jeroen, and I'm super proud that finally we've got AltFi in continental Europe and specifically here in the Netherlands. We started the business in 2010 in London. And only 2.5 years ago, I almost cannot believe it, but only 2.5 years ago, we started the business here in the Netherlands, in Amsterdam. And I think it's really proof of the fact that we are, as a business, as an industry, growing so quickly that we now have AltFi here in Amsterdam. And we're going to have a great day, I'm sure. But I already now want to tell AltFi that this really is a start of a tradition, and we should have AltFi every year in Amsterdam. I just want to make that sure. Make that clear. So the next 20 minutes I spend with you, I will do 3 things. Let me see. Yeah, I will do 3 main things. One is I talk a little bit about Funding Circle as well as the beauty of our model and the beauty of the model that the industry is using. I will talk about Europe as a fast-growing market, and specifically about the Netherlands, of course, because that's where I know most about, as well as a little bit about Germany. And thirdly, I will talk about a couple of trends I think we should be looking out for in 2018. So let's go and do these 3 things. First of all, a little bit about Funding Circle. If we start in the right upper corner, I think the most impressive number we can deliver today, talking about our company, is the 4.5 billion in lending we have originated through our platform. And that is gone to 40,000 businesses over the last 7 years. I think even more impressive maybe is the fact that this year alone we will be doing around 2 billion euros. So it's still a very, very steep growth we're showing. We're with about 800 people now across 4 geographies. So we're in the US and San Francisco. Our main office is in London, and then in Berlin as well as in Amsterdam. These 800 people work truly across the fin and the tech. So a big chunk of the people work on the financial side, and a big chunk work on the tech side, and then there's of course a group in between. We started in 2010, as said, and then after a few years moved to the US, and later on moved to continental Europe. Going to the bottom right corner, I just put a couple of faces of people that work in our company just to show that the last few years we've really increased the professionalism of the entire group of people that work for us, but also especially on the top level. So just 2 examples from a fintech perspective. Jerome on here is our Chief Risk Officer, is a former Barclaycard CRO, managed a 40 billion portfolio. As well as, for example, David Yu, our Chief Product Officer, former CEO of Betfair, both fin and tech again. So you see we're really trying to get more seniority into the business. As you're doing billions a year, you really need to do that. Moving on to the clockwise to the left bottom corner, again, the fin and the tech. These are our equity holders, our shareholders. We raised over 250 million over the course of the last 7 years. And again, you see the tech and the fin represented. So you see players like DST or Excel or Union Squared Ventures, truly like, tech backers, and then more players like Bailey Gifford or Sense Capital or BlackRock being more the financial backers of our company. So everywhere throughout the firm, it's fin and it's tech. The other thing I like to mention there is that a big chunk of the shares are owned by all the employees. So literally every employee has shares in the company to make sure we're super aligned what we do as a company with the people. And then going upwards to the left upper corner, here you see our diverse lending base. So all kinds of different funders, but I will get back to that later on. I put a lot of different milestones here of Funding Circle. Just a couple to point out. As I said, we moved to different countries, and we will move to more countries in the future. We got fully FCA licensed this year actually, in the UK. And a big strategic partnership we struck this year was with Dutch Aegon, lending into UK businesses. Other important moments were the listing of our fund on the London Stock Exchange, talked about earlier, as well as cooperation with the European Investment Bank, as well as with the British Business Bank, were important milestones for us the last few years. I think the main problem we are solving as a company is still the funding gap. And I'm sure there's bankers in the room here, and often they will tell you we are closing that gap all the time. We do want to fund small enterprises. But it's not always the case. Maybe some do, but most of them still don't, and there still is a massive funding gap across all the countries we operate in and many, many more. There still is a big gap. If you talk to borrowers, they're always looking for credit, and it's always hard to find. And if it's easy, if they can actually find it, it's not easy to access. So this is still a big problem, I think, why we are there to serve customers in a fast and give them a better experience. If you look at what Funding Circle then actually does compared to banks, to just make that separation very clear, I think we're doing one thing, and that is just lending to small businesses. So it's focus, 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 nothing else. We're really doing that thing, and we're trying to do that really, really well. We don't do all the other kinds of products banks are offering. We really focus on that thing relentlessly. That's what we do. And therefore, we have integrated technology just specifically made for SMEs. We totally focus on data analytics to cater our customers better. And I think what is very important ultimately is that because we're doing so many customers, so many borrowers all the time, we're becoming better and better in distinguishing the good from the very good, or the bad from the very bad, and everything in between. So that means ultimately we can drive prices down. And then to the bank model, the big difference with us, of course, is that a bank is going to lend from the balance sheet, whereas we are an off-balance sheet, just matching investors with borrowers. And that is such a critical difference where you will never, ever change that difference, I think, from what we do. And then obviously banks have, I think, have other things to deal with, which keeps them busy, is a heavy regulatory burden to deal with, as well as with legacy systems. Although I must say we are growing as well, and we starting to have that legacy issue. So I know where banks are coming from. So, but that ultimately makes us so different from what a bank does. And then just for the people that are not aware of what the business model actually is, Funding Circle does, because it's so simple, it's easy to explain. It's really, on the one hand, we've got the businesses, and on the other hand, we've got the investors. On the businesses side, it's very homogeneous, so it's just small companies. And on the investor side, it's much more diverse. So we've got you going to our website, investing 100 euros into a crowdfund loan. But we also have got big institutional players investing. So it's a very, very diverse base of investors. And how do we make our money? We ask for an upfront borrower fee from the SME, and then we have the servicing fee of the investor. So we are actually distributing the cost among the two customers we have. And again, as said, as we are not lending from our balance sheet, we will have no systemic risk in terms of what a bank has when too many loans go bust, then a bank has to go to its equity, and if there's not enough equity, ultimately they will come to, they either go bankrupt or the taxpayer has to get in there to solve the issues, which we have seen a lot in the previous crisis. I talked a little bit about that diverse funding base. So if we start down there, retail investors are still extraordinarily important for us. I talked with a couple of people earlier today, and I already got the question 2 times, hey, you guys stopped doing retail funding. No, we didn't. We're not planning on doing that at all. So we have 70,000 retail investors investing with us. And it's an extraordinarily important base for us, also here in the Netherlands, but as well as in Germany and the UK. So the big difference between what retail does, where they do pick and choose, so what we call partial funding, with our institutionals, is that most of our institutionals are picking whole loans. They're buying the whole loan in different legal structures depending on which geography you're in. So if you go upwards, you see that we've got all these semi-government institutions like the European Investment Bank or the German Development Bank, KfW, or the British Business Bank, and all these different institutions funding our loans, as well as local councils. We're working on this in the Netherlands specifically as well now to get local councils involved. And then we're very proud we did our first securitization in 2016. Definitely hope to talk with people around here today on that topic, but it's so specific that maybe not good to talk about now. And as mentioned, the Funding Circle fund at the London Stock Exchange, which is a very important fund because it's raising money, obviously. That's why it's important for us to fund our loans, but also because it's really coming very close to what we really want, which is a global pool of capital. So German investors investing in US loans, or Americans investing in Dutch loans, or whatever construction there will be possible. And that fund actually does that, because if you buy a share, indirectly you're investing in loans in the east of the Netherlands or the west of Germany or wherever we are. So it's truly close to what we want in the long run. And then the last one is institutional direct lending, a very important pool for us. So institutions directly lending into the businesses we originate, the loans we originate. And Aegon is a recently announced a partnership, very important for us, and also very interesting because it's Dutch money, quote unquote, going into UK loans at the moment. So truly international again. And then on the borrower side, I think it's very interesting to see what we have learned over the years, that our borrowers are actually quite the same everywhere we operate. So we just put in the three European countries here. Their average loan size is around 70,000 euros. They have an average turnover of around 1 million. And they're over 10 years in trading, so they're solid businesses. They know how to drive cash flows. They know how to repay. These are not the high risk startups. These businesses know what they're doing. They know what they're working on, and therefore we're also able to deliver stable returns for our investors, which of course key and crucial to our business. Last point on Funding Circle specifically. I get this question very often: will you go to new countries? Yes, we will, because we're now only 3 European countries at some point. But we see that these markets are so big still. There's so much growth possible that there's no hurry for us. But we will definitely at some point to cover that question. Europe reaching a tipping point. Well, first start with this. If you just take 2 countries, and I took the 2 countries we operate in, which is Germany and Netherlands, this is the lending in billions, new lending per month in these 3 geographies. And only looking at these 2 countries and forgetting all the other, 30 plus countries in Europe, that's already a bigger market than in the UK. However, still 57% larger actually. But still, if you look at this picture, it's so different from where we are. It's still the UK, this relatively tiny market compared to the rest of the European Union. And this is what it is, and this is including all the other countries. So it's not even a fair comparison with the previous slide. And that is, I really see that changing, and it will change because the opportunity is so fast in the rest of Europe. But for now, this is really what the picture is. So I'm sure if I want to have AltFi here again next year and over the years, we need to get that blue circle much bigger. But this is really where we stand right now. Diving a little bit into the Netherlands, I think will it change? Talking about the previous slide, yes, it will. And I think one of the important indicators for that is really that over 20% of new mortgages in the Netherlands are now done by non-banks. I think it's the largest proportion of the market in the entire OECD. Players like Dynamic Credit in the Netherlands, very, very successful, are doing this. So there are no banks involved there. It's just direct lending. There's pension funds and insurance funders behind it, but it's not the banks doing it. And they're actually growing rapidly. And what we believe is that if that can happen in mortgages, why would it not happen across all the other forms of lending? For example, SME lending, what we do. So I think that's a huge indicator, and also a huge indicator why the Netherlands is such an attractive market for us. Because it's that you see on the left, it's highly digitalized, and people are used to doing business already. For example, with mortgages, with non-banks players. A little bit about the Dutch business. We recently finished the month of October. We did 100 loans exactly, 100, which was the largest number of loans we've done in the Netherlands. That is extraordinarily small compared to what we do in the UK and the US, for example. Germany and Netherlands are, teaming up now at the same speed approximately. But in the UK, for example, we do over 1,000 loans. So we're still small, but it's growing rapidly. We did 5 million last month. What's interesting about the Dutch market is that we've seen it in other markets as well, that you start with many, many players. So I think there's, don't quote me on the exact number, but over 50 players registered with the regulator in the Netherlands. And I don't think that's going to be the case in the next few years, right? There can't be that many players in such a market, especially because the fees you're earning are relatively low, so you need skill to survive and to be successful. And another number I wanted to share with you is the net new lending for loans up to 250,000 euros. In the Netherlands, is around 500 million per month. So Funding Circle did 5 million, so I think we're around 1% now of the market size. In terms of regulation in the Netherlands, I think the Ministry of Finance recently has issued a consultation paper where all players can input their wishes as well as their ideas. And this will ultimately, I think, lead to a full regulatory framework, which I think is super necessary to make our industry successful. Because you don't want to have simple things like backup servicing not to be arranged for players like us. And then this is very tricky because my colleague Torsten is in the room. And so I'm a bit scared to talk about Germany. He will be talking on one of the panels at 4 o'clock. But just to mention two things which I think I'm safe to talk about. The first one is 27% of small companies report that access to credit has deteriorated in 2016. I think that fact alone for Germany is already a lot of reason to be there. Compared to the fact that where Germany is really, really different from Netherlands as well as the UK, here 3 banks dominate the market, ING, Rabobank, and ABN AMRO Bank. Whereas in Germany, I just asked Torsten the exact number, it's 1,800 banks. And there's all these local Sparkassen having very tiny balance sheets. So I think that is, the perfect environment to do some disruption, and I think that is what Torsten and team is exactly doing, but he will talk a bit more about that later. But clearly that is a market, very different approach, also regulatory. We work with a partner bank there, but definitely a market that is very interesting to disrupt. Then moving on to some of the trends we're seeing. I mean, we came up with 15 trends, but we just selected a couple of very obvious but most important trends. First of all, clearly, as said, there's huge growth. And I always compare it to China, right? We've been talking about China for a long, long time, and they're growing like crazy. At some point, if you keep doing that, you're just becoming seriously big. And I think that's what's happening in Europe. Unfortunately, we didn't have the data of 2016 and 17. We have our own data, and we see exactly the same trend moving forward. And that's just what's going to happen. It's just growing quickly, and that's ultimately the proof of the success of the sector. The other trend is around institutional funding. As said, retail funding is still extraordinarily important, also for us and for definitely for the entire industry. But at the same time, it's institutions coming in to also do their share of the funding. And we've seen this growing all the time, and I think it's needed if you start doing billions a year. But this will only grow. And here is a picture of, I won't go into the details of all the arrows, but it's our Funding Circle Income Fund. And you see that it's truly becoming global pools of capital funding our loans. And there's all these countries that you see are involved in funding the loans across the 4 countries we are operating in. So that's definitely to look out for in 2018. It will definitely only increase. And then on the regulatory front, I think there's very interesting things to expect. It's always tricky to talk about the European Union coming with big changes because you never really know when it's going to happen or if it's going to happen at all. But I think there is this consultation in the Netherlands going on, as well as a consultation on the European Commission level. And it's very much of interest to our industry, because currently we're operating in the 4 countries, we're operating in 4 different regimes. So in Europe, 3 different regimes. So as I said, in Germany, we're teaming up with our partner bank. In the Netherlands, it's a direct link. The UK, it's a direct link, but we're fully licensed by the FCA. In the Netherlands, we operate under an exemption model. So it's very, very different models. Which is difficult, right? Because you need to do every time per country, do all your get all your regulatory things in place. So it's very interesting to see if we could get these different countries more and more aligned. It will be difficult because the countries are in very, very different stages of development. So you will see the UK, where it's really become mainstream. We're now by far and large the biggest lender, including banks, but here, I mean, clearly we're not. We're just a tiny fraction, and that makes it difficult to get regulation harmonized. Also, because there's different players out there. We're doing lending, others do equity, and others do other forms of platform distribution. So it will be hard, but it's definitely something to look out for, especially this consultation. I'm very hopeful that a lot of people in the industry will respond to that consultation to shape the regulation. But again, it's early days. Let's see where that will lead to. Last point I want to make today before taking some questions is really our vision. We came up with our vision of doing 100 billion per year and create around 3 million new jobs in 10 years' time. That was about a year and a half ago, so it's going quickly. And I have only 8.5 years left to get that done, and it's really focused around 4 things. It's low cost, we're very, very low cost, and very capital light, right? Or no capital involved. That's definitely a model we want to keep. Second one, customer experience is everything for us, right? The high net promoter scores are crucial for our success, both in the industry as well for Funding Circle. And then ultimately, we won't be doing 100 billion in these 4 countries, so we need to scale up in different countries. And last one, crucial, we've now 30 or 40 people directly working in customer analytics and data. I mean, everybody talks about it, but I see it every day in our company. It's so extraordinarily important to make better judgments on the loans. So we're aiming for that 100 billion. A long way to go, but we will at some point, and by that we will be creating a lot of jobs and both serve our borrowers as well as our investors as much as good as we can. So thank you very much for your time. I specifically want to thank AltFi for coming to Amsterdam, and I think I want to repeat myself. Please do come back to Amsterdam because it's a great fintech place to be in, and I hope you all have a great day today. Do you want to stay here?
Yes, stay there.
Yeah.
I'll just insert the microphone. Apologies, everyone. Are there any questions? There, remind you again, if you go to events.altfi.com, there is the question slab. I've got it here. So if you want to ask any questions. In the meantime, if anybody's got a question they actually want to ask, we can stick up your hand and we'll come over to you. I'm just going to wander around this way, so I'll ask you a question while I'm going over here, then we'll come over to you as well. How important do you think there is a trade-off between retail and institutional investments in your platform? Because one of the great challenges is that institutional money is quick and it's easy on one level, because you have one investor you're dealing with. But retail money is stickier. So where's that trade-off in terms of raising capital? Because some platforms in the UK have actually said they don't want any more institutional capital. I think RateSet is probably in that category. And because they don't really want the things that go with it. Talk us through your process of how you deal with that institutional and retail mix. And I'll just wander over here in a minute and bring the microphone.
I think that's a great question. I mean, ultimately, there's no trade-off for us, right? Because we got our risk models in place now that seem to work really well. We just need a lot of funding, right? We can use a lot of funding, and I think it's very, very important that we keep serving both. So both the institutionals as well as the retail side. And ultimately, for us on the retail side, we just want to make 100% sure that everybody diversifies, right? We don't want people to go into one loan with all their money, right? That's the extreme form where we always want to stay away from. And that's why, for example, in the UK, we now move to a full auto-bid situation where you just pick two different, either you want to be more aggressive or less aggressive, basically, and pick one of them. And by doing that, you lose the pick and choose, but what you gain is really that people diversify. So on the retail side, we really focus on diversification. And on the institutional side, yes, on the one hand, it's awesome, right? You get a whole loan funded immediately, boom. But equally, there's a lot of work before, right? Before you get these big institutional deals. So often they take a year or 2 years to actually fully close a deal like that. So it seems easy money, but it's not that always that easy. And so again, bottom line, we do want to do both. And whether it's going to be stickier or not, we will have to see in the future.
Okay. A gentleman here in the back's got a question.
Yes, good morning. My name is Roberto Condurmari from Compass Asset Management in Switzerland. And the concern I wanted to share is about the UK leaving the European Union. So the elephant in this conference is the fact that we have Brexit. Nobody's talking about it, but this will mean, if I understand well, that the UK will not be leading as it has the regulation on things like marketplace lending, like it has done very well in the last 5 years. So do you have this concern? Who do you think will take the leadership? Because coming from Italy, observing countries like Germany, it's not really very encouraging. Do we risk a significant slowdown in the pace of development of regulation across Europe?
Yeah. Well, I mean, I don't think, for me, it's not a problem at all to talk about Brexit. I'm not a specialist on it, but it clearly, we don't know yet what Brexit really is, right? If I could ask anyone here to give me a definition of what Brexit is going to look like, that would be great, because that would help us a lot. But so of course we know some of the directions of it, and very simple for our company first to answer that first. I think we've got a lot of non-British people working in London. That's always our concern, right? To make sure they stay working there. I think that will be fine. At some form, there will be negotiations, but I think that's going to work out. And then who will be leading the industry? I mean, as I said, we're now operating standalone, basically, country by country, right? From a regulatory framework, but also we have the local people everywhere, so we keep doing that. And yeah, will they be leading it? I don't know. Will be harder through Brexit, also hard to answer for now, because we don't know exactly where we'll be going to. So yeah, I mean, let's see. We're first in Dutch we have a great saying which says it's always things are always brought to you more difficult than it turns out to be. It turns out to be not that hard as we think. So let's see how that goes. But I don't know if that's answering specifically your question, but. We need to. It's just wait. That's the main point here.
And we will definitely be coming back to that in the panel afterwards. So don't worry. I'll be tempted to answer some of your questions. I think you might just see some questions coming up on the screen here. Oops, no, I think it just switched itself off. I'll use this instead. There we are. Ronald's got one.
So just read out the question's not here right now. Okay. So Ronald Kleverlaan, a very well-known Dutch person in the sector, is asking, what's your view of the referral scheme? In the UK, it was implemented almost a year ago. What are the results for Funding Circle? What can be improved? So I think the idea of the referral scheme is really good. The idea is really good, because if a bank can't help a customer, then refer them to a player like us. That is a beautiful idea. But of course, as always, the devil is in the detail, because how much will they actually refer to us? One, and two, what will they refer? So how much? Well, not much so far, to put simply. And what will they refer is not always the best customers, right? So the question is, will it actually work in practice? So it's a very tiny, very tiny piece of what we do right now. But again, the idea is good, and if there would be better implementation of it, it would be great to have it here in the Netherlands as well.
I'll help you with you. I'll read them out. What's the next best geography that you're interested in?
That's nice. Yeah, I think there's.
Give us a clue.
Yeah, no, it's very hard to say. I think there's many European countries. We would focus on Europe first for now, and I think if you look at what would be the indicators for us to go to, one of them is really the availability of data. data sources. The digitalization of the economy as a whole, specifically SMEs, is very important for us. The economic well-being of that country overall is very important. And then I think it's important that that there is a regulatory framework that works for us. And what countries that will be, I mean, you can figure out yourself. There's a couple of very interesting countries, of course, around us. There's very interesting countries in Scandinavia.
So Estonia, that's got quite a good...
Estonia will be a very interesting country to go to. I mean, definitely digitalized enough, so...
Absolutely. Okay.
Probably most digitalized country in the world, right? So.
Absolutely. Next question is, you didn't mention co-financing opportunities. What percentage of the projects reaching the 100 billion will be co-financed together with banks?
Oh, God. That's so in 8.5 years' time, so that's hard to answer. I mean, I think it really depends on what we can... I mean, we want to keep that very diverse funding base. And I would love to answer this question more specifically, but it really depends on what our funders, how they want to fund, right? And if that's going to be through a fund, or that's going to be direct lending, or in other structures, securitizations, that all works for us. We can take all that different forms of money. So.
And one last question for you, and then I think we probably have to call it a day. You talked about being very focused on SMEs, but there are different products within the SME lending set. For instance, there's invoice funding. There's bridge funding in property. And I know you did do, I think, in the UK in the past, you have done some property there now. I'm not sure you do it any longer, though. No. Are you tempted to go into other markets? Because, of course, Market Invoice, which the clues in the title, does invoicing, has gone into direct lending. So are you tempted to diversify your product portfolio?
Yeah, that's a pretty simple answer. We're always very tempted to do a lot more, but we never do. Almost never do. We've tried a couple of things, a little bit here and there, but every time we find out by relentlessly focusing on one product, then that's where you become successful. So a lot of people within the company always come with ideas. We can do this, this, and this, and this. And as Samir Desai, our CEO, always says, it's so much harder to say no to things and say yes to things. Yeah. I think that's the answer to your question. We keep focusing. So short answer, very unlikely.
Okay. Well, look, put your hands together. Thank you very much.
You're welcome.
Excellent keynote.
Thank you.
Thank you very much.